Yes.
Yeah.
Great. Good luck, everyone.
Thank you.
Thank you. So, welcome to this closing panel of FinTech Connect. My name is Anette Brolos. I'm an independent FinTech analyst, and I've been working in the FinTech and finance space for many years. So, the last few years, I've been working on financial products for women and women and inclusion. And I can't help noticing that for once we have an all-woman panel here. So kudos to FinTech Connect for making that happen. Really great. Today we're going to discuss how the huge companies, the incumbents, are going to do in the next 5 years. How they're going to be based? What can they keep driving innovation, and can they keep competing for the best innovations with the many fintechs growing up here? I think that's an interesting question, and I think that we can learn a lot from what we already saw through the conference. So it will be quite a freestyle discussion, I'm sure, with our great panelists. And as an audience, I'd like to invite you to add any comments and questions, and we'll try to add them to the discussion as we go along. There may be some that we don't have the time for, but I apologize for that upfront. But it'd be great to see a good activity here in the last time we're together. So I'd like to welcome my panel and ask them to introduce themselves, and also to start by seeing where do they see the incumbents, and what positions are they in today, how they're doing. And I wonder, could I ask you, Rita, to start?
Yes, of course. Thank you, Anette. So I'm Rita Martins. I'm the FinTech Partnerships Lead at HSBC for group functions. So my role, just as a quick overview, I identify and scout fintechs, external fintechs, and then try and bring them and introduce them to internal stakeholders at HSBC to really drive innovation and partnerships. So regarding your question, Anette, I think incumbents have really gone on a journey. I think before there has been quite a few different partnerships and discussions, but they have learned quite a lot. I think both sides, really, the fintech, small startups, and also the incumbents. So we are now on a better place, let's say, in which incumbents are really driving many more partnerships, and those are really successful. So I think both sides have really learned, and I think there is also been a change around the mindsets at some incumbents, in which before there was a very much more focus on developing internally, while now incumbents are much more open to invest into companies or even to partner with companies.
Great, thank you very much. Koley, would you like to go next?
Sure. So hi, I'm Koley Corte. I am the Senior Vice President and Head of Global Business Transformation at Alliance Bernstein. We're about a $750 or $800 billion asset manager that is global in scope. And my role in terms of business transformation is really considering how we modernize our distribution. How do we use new technologies? How do we partner with new companies? How do we find new ways to get closer to the customer, expanding the array of solutions we can bring to the customer, expanding the ways we touch the customer and how we can distribute at scale, and deepening our knowledge of the customer. Our goals are really pretty simple. It's how do we know the customer better and therefore sell more to those customers and retain those relationships longer, and be a really valued partner with them, and how do we reach more customers, right? So that's how we're going to scale our business. And I think that segues nicely into your question about the role of incumbents and fintechs. Is I think there's this neat ecosystem that I think Rita was hinting at, where there's like a symbiotic nature to the relationship, where the fintech, we talked this a little bit before we started the panel, right? The fintech has the ability to move quickly and innovate. And if we can bring that in together, we have a bigger opportunity where we have an established business base, a customer base, and they have new ways of thinking about the ways to do business, and we can bring those together. And I think that's like a powerful combination for both parties.
Thank you. And I come to you last, Susanne, but definitely not least, but you come from the fintech side for a long time, so it would be great to hear your perspective on what we already heard.
Yes, thank you, Anette. So I'm Susanne. I'm the CEO and founder of FinTech Circle, and we are a FinTech community. So we have got about 130,000 people, working in FinTech who are part of our network. And I invest in FinTech startups as well. We've got our own investor network. So our goal is to help FinTech startups who raise money for the first time, to help them find the best investors. We also wrote books. So we wrote 7 books already on different FinTech topics. And we just published at FinTech Connect yesterday our 2nd film, which is a co-production with ITN about the future of FinTech, specifically focused on ESG, so we call it responsible FinTech. So my perspective at our panel today is almost representing the FinTech startups and the FinTech scale-ups who want to work with banks and what they feel. Equally, I'm also on the board of a UK bank, so I can put myself very much into the position of being in a bank, and working and choosing which startups to work with. And as on this bank, it's called Crown Agents Bank, where I'm on the board of, we acquired a FinTech company even. We decided to acquire a company because we didn't have the know-how in-house. So I will try to add, Anette, based on what you like to focus on our conversation, either the startup angle or the banking angle, or maybe both.
So you see the incumbents doing okay now, or where do you see them at the moment?
I agree, with what Rita said and what Koley said, that I think all incumbents really have realized that startups and scale-ups are not competition for them anymore, but actually they are helping banks and institutions and asset managers to innovate faster. And when I think back, 5 years ago, it was different. It was like, startups are competing with banks. But now I think this has changed. The narrative has changed. And now what we see as competitors are the big tech giants. It's kind of Apple, it's Amazon. These tech giants, they are, in reality, they are competing. I think Google Pay, Apple Pay, Alipay, WeChat in China. And so I think from an institutional investment point of view and banking point of view, you want to be attractive to startups and to scale-ups, and ideally find the best ones to work with you in order to innovate faster at lower costs and help the startups scale up their products, their services, leveraging what you have got as an institution, which is your compliance abilities, millions of clients, millions of assets under management, and helping, almost providing a platform for FinTech companies to succeed. I think this is the way I can see it work in the best possible way.
So basically what you're saying is that if some time ago the incumbents were a little afraid of the FinTech competition, and now they're on a steep learning curve to draw in partners from different perspectives to work towards the future and see different competitors perhaps. So that's I think put together a nice position. So looking forward, how do you see the role of incumbents? I don't suppose they will have just the one role, but we heard mentioned also through the conference here the last 2 days of different positions. So you can be the orchestrator, or you can be the provider of all the tubes and the back end, or you can be, as we often hear from a big payment provider and consultant, that they could be the providers of identity. What kind of a role do you see for incumbents going forward? So we can come back down the line, starting with you, Susanne. How do you see it?
I mean, I would say, when you think about innovation, there are 3 types of innovation. One type is called core innovation, where you basically improve existing products, existing services. You try to make them better, continuously innovation in those existing services you offer in existing markets. The second part is called adjacent innovation, where you move into new markets or you enhance, your products or services. And the last part is transformational innovation, which is really about breakthrough ideas, about inventing new needs or realizing that there are new needs which have not been, responded to yet. And I remember I spoke to somebody in Barclays and asked, how does Barclays do that? And this gentleman explained to me that 70% of the innovation focus in an established bank such as Barclays is focused on core. It's core innovation, improving existing products and services. About 20% is adjacent, and 10% is about transformational. And you couldn't do it in a different way, because otherwise you would destabilize, a large company such as Barclays. However, a fintech startup or a fintech scale-up, you could say they have nothing to lose, because they're new, they can challenge the status quo, they can focus on transformational innovation, because that's why they exist. That's the reason why they've been launched, because they want to change how things are being done now. So that's why there's such a great way of working together, because an established company can't and often is unable to disrupt itself, because there are lots of internal politics as well, internal, people heading up their own business units, their own P&Ls. They don't want to go this way. They want to keep, the headcounts, they want to keep the P&L. But as a fintech disruptor, you can afford to challenge everything, because you have nothing to lose. You're starting out from scratch. And therefore, fintech startups have got the potential to change the world, literally. And then I think after they've shown what they can do, either, of course, they compete they can compete. If you think about a B2C company, TransferWise, which is Wise or Revolut, they, of course, are competing successfully with established players. But lots of B2B companies, they want to sell into banks, into asset managers. And for them, they can come up with a new business model. They can come up with new products and services, and then promote those to established institutions who can, after they see it working, it's less risk for them to take it on board. And so the whole innovation lifecycle happens outside, of the institution, which is also less costly. But at the same time, B2B startups need the willingness of institutions to work with them in order to give them scale and give them, revenues. So it's really about, a partnership makes most sense, I think, for both sides. And so that's where I believe it's a win-win. It's a true win-win for both sides.
Great.
Maybe building a little bit on what Susanne was saying, I think of core as a little bit, I understand everything she's saying, but I would think about it a little bit differently. As I think about what is our core competency, right? So our core competency is managing investments, right? We're an asset manager, and many times the fintechs we can partner with are bringing in things that are not our core competency. And that's actually how I think about, sort of build by our partner. Where should we play? Like, we should be playing and owning in our core space, which could be an acquisition, could be investing, could be building out capabilities. But in these things, especially around distribution, new technologies, new ways of reaching customers, that's not our core business. There are other people who are better at that. So why the partnership piece, I think, makes a tremendous amount of sense, and can drive one element of that disruption, and can help feed us, right? And that I have that symbiotic circle of, if we know the customer better, we can create better solutions for the customer. Those solutions could be our solutions, could be co-created, could be third-party solutions, right? But if we can bring them together, and then by continuing to deliver them, we deepen that relationship. So I think on the fintech side, that could be through investment, could be through just a business partnership or relationship, and could run the gamut, right, of ways you could work together. But I do think it's really important to know your business, right, and know, and I think Rita said this early, right, was it used to be maybe that incumbents thought that they should build everything, and I think if you know your core competency, you probably know you're not. We're not, right? We're not a technology company. We're not Amazon, right? And so, what is our core business? And if we can stick to our core, and we want to expand our core over time, but then satellite it with these other capabilities.
So, and that makes totally sense. We had the discussion on the panel this morning on build by our partner, and it's not a question we understood from the panel of who's winning. Is a question of doing all three things to meet your end goals. Rita, I'm sure you want to comment as well.
Yeah, so I think I totally agree with what both Susanne and Koley were saying. I think that's more probably from a short-term perspective. So maybe I'll try and answer your question from a long-term perspective. So I think from a long-term perspective, the financial services industry is changing a bit. So in the future, we'll see that financial services will be not separate, but parts of the customer experience. And that's a really interesting question, is where incumbents and fintechs will play in that role. So there will be part of a big ecosystem. in which they will be partnering with companies that are not part of the financial services industry. And that will be really interesting to see how the different roles can be played in there. And for that, if we go back to the partnership, one of the key considerations that the big incumbents will have to think about is who are they going to partner with? Because although they will not be at the forefront of the customer experience, they are part of the experience. So they want to make sure that it's a seamless experience, and that really the goal is that the customer have such a great experience that they don't see between what they're doing versus the financial services or the banking experience.
Maybe if I can add, because it's what Rita and what Koley just said, one example of a fintech company in the asset management space, which I wanted to share, which is really interesting because they were a company, out of Cambridge University. They're called Algodynamics. And we call them a wealth tech company, but they didn't start in this space. They started out in the medical space, and their focus was to predict heart attacks. So it was really, it would be wonderful if we all know, 24 hours before we have got a heart attack, because we could do something about it. So they came from the medical space, and then they transferred the technology to the stock market. They said, okay, we can predict heart attacks, but we can also predict when stocks go down. And this information is, of course, super valuable to a fund manager in the asset management space, because as a fund manager, when I think back, when I worked for Morgan Stanley Asset Management, for 7 years, our fund managers, the only thing which kept them up at night was if they underperformed the index, because then they lost their job after a while, because you could buy an ETF instead. But if you've got a fintech company which can tell you and predict when those stock prices go down, you can hedge your position, then you can generate more alpha, more outperformance versus the index. And so you keep your job and you have better returns for the portfolio. And so that's another example, to what Koley said, is like almost fintech companies come from the other side, but who help then existing players to see opportunities which you wouldn't find normally because it's not core necessarily in the business you're in.
Koley, you wanted
I think
to.
Rita had, sorry, I was just going to jump in with one other point, but I think Rita had a really good point about, which is we've talked about fintech and incumbent financial services companies, but I do think a lot of the growth opportunity is back to my example of non-fintech companies, right? Like an Amazon. How do you work with them as well, right? So, and then, and where do you fit in that, right? And that's where I think, understanding what your business is, what your objectives are, how you want to work together, understanding what they want to achieve, and then really at the heart, understanding what the customer wants to achieve, right? So you can design the series of solutions and who you work with around that.
But it's really great because I hear you saying that that's a possibility for the incumbents to take a role as orchestrator to build their business with the partners, including the partners that are further from their core business, which is really interesting. So this is a potential. Is there a difference between different kinds of incumbent institutions, bigger, smaller locations, as to how they would be able to fare in this area?
My thought is actually it depends on leadership, right? It depends on conviction, right? And approach and confidence, right? So I haven't seen it differ like by market or by segment, but I do think the leaders are the ones who are going to, or are the management team is forward thinking, right? Has a growth mindset, is thinking about the different ways it could play out. If you're in a protect mindset, right? I think, and I don't think we're in those organizations, right? But then I think it's very hard to think about how you partner or think about doing things differently, right? So it starts with like, what is your core? What is your business? What is the future of that business? And how are the leaders thinking about, orchestrating getting there, and what kind of people and talent they bring into the organization to support that too. So yes, you don't have roles like Rita's or mine in organizations that aren't thinking about doing business.
Yes, I totally agree. I was going to say very similar. So I think the main difference is not actually the size of the company or where they're located, but it's really who is leading the company and if they have that mindset, and if they're really willing to bet I mean, we're talking about really big changes that are happening right now. So you're going to have to bet on a few ones and be comfortable that some are not going to be working. Of course, you need to have the right things in place, and you, like Susanne was mentioning earlier, you only bet a small part of your business within the sandbox, but you need to be able to open to new ideas, to new innovation, and also you need to be bringing the right people, or people that understand the new technologies, and also reskilling your old team, because these technologies, they are changing at such a fast pace that it's very important that your existing team or new team really understands the technology, so they can understand what are the potentials, what are the risks and issues with some of these innovations and new experiences.
So that's interesting. So leadership is important, and openness and knowledge of understanding of technology also, and of course of the competition in the area. What are the challenges in taking a good role in this space for primarily incumbents?
I think before we got on the call, we talked a little bit about how the organization, an incumbent organization that's been successful in this space, is probably set up to protect against some of the behaviors that we want to experiment with, that Rita was talking about, right? This experiment growth mindset, this ability to fail, right? The organization has actually been set up really not to fail, not to create risk, right? And so how do you make sure you spend your energy in the right direction? How do you put up those guardrails, and are you able to set up proof of concepts or other things that are within the bounds of what you're willing to do, but also that you can quickly get to a yes or no? And so one of the things we did early on when I joined, because I realized that, look, it's really hard coming into an organization that's a large, successful organization that's done things a certain way and drive change, especially when you come from outside. And so the first part was setting up, like, what is our vision and strategy? What's the operating model? Where are we focusing? And then it was like, oh my God, how are we going to get these things done, right? Because we brought people in, and almost the organizational reaction was like, we can't do that, we can't do this, we can't, and so we've moved a lot in the past 4 years that I've been here, and we've set up this Get to Yes team. It's a corporate enablement team where we have the most senior people in the areas where we are creating risk, helping build those guardrails, and helping understand the things that we're attacking, and understand how we can solve for them and how we can partner, and getting us to yes quickly. And so that's like our head of legal and compliance, our chief technology officer, our head of info security, and they work with me and the team on how do we get to yes. And look, there's some things that are going to be no, and that's fine, right? But getting to a quick no, getting to a quick yes, it also helps the fintech or any startup, right? They don't have a lot of energy to spend working in the maybe, right? And then, like, how do we stand up a POC, move to a POC quickly, stand it up, see the results, and then figure out how we scale from there.
Interesting. Susanne, would you want to comment as well?
Yeah, I mean, I can, based on the fintech companies we are working with, who are B2B, who sell, to banks, for example. The biggest issue which we often hear about is this long sales cycle. They say it takes 9 months, a year more to sell into large institutions. And those sales cycles are very difficult for small startups to finance, because they've got limited budgets. They've got, they're looking for the next investment round potentially, so they need to show results quickly. And that's the hard part. So normally what we say is, maybe one can combine long sales cycle clients, with more shorter sales cycle client opportunities. But I think that's why I think it's so important to come to yes quickly, or to come to no quickly, so that you know where you stand, so that startups kind of know there's a realistic chance for me to win this mandate, and that's the revenues we could earn. Or from the beginning, no, we're too young, maybe we're too young, or maybe we should work with a consulting company, with another partner to get into the procurement process. But we can't do it directly. So I think clear communication and expectation management is very important for younger fintech companies.
Rita, would you like to add something as well?
Yeah, so I totally agree with both comments. So I think the processes to partner with some of the fintechs is still the big thing. So it's how do you make it quick? So you have a very small and nimble startup or a fintech that can very quickly make decisions, get the right documents in place. And on the other side, you have big companies that have multiple layers of stakeholders that need to approve certain decisions. You have compliance and legal teams that want to make sure that they review what's going to happen and what data are going to be shared. So it's how do you combine both? I think is definitely a key challenge and is a known challenge. We have been looking into the onboarding, for example, and it's interesting to hear from Koley. We don't have a go-to yes, but we have at least a known and understood and agreed process on how to onboard fintechs and some of the different ways that we can do it with them as well. So I think as industry, we are still not there yet, but it's clearly a known and agreed issue that we are trying to work towards as well.
I like it that you focus on the things that you can change, your culture, your leadership, your focus. I was thinking when we talk about this onboarding process and some of the processes that characterize many of the incumbent organizations, is regulation an issue here? Because often the old banks, to take an example, are heavily regulated than fintechs. And one of the spaces where we've seen this recently is the whole building of buy now, pay later structures where you can add credit. That's not really credit, but it's still somehow credit, but it's not regulated. Is regulation an issue? Rita, would you like to comment?
Yeah, so I think regulation is a very interesting one, and it is, and it will be more and more impacting on how much innovation we can do. So another very good example is the AI, so artificial intelligence, which is being used by many fintechs, and you can have many different services. Now, when we partner with a fintech that does have AI, the main question that we also have is it a black box, or can you explain to us what he's doing? Because it's a question that we know the regulator will know. So it's a very interesting point, and it's something that I think in order for the financial services ecosystem to move forward, we need to make sure that the regulators are also part of what we are learning from the innovations and the new technologies, and that we create something that, again, is regulated and it has the right controls, but it is not so much that it hinders a bit the innovation that we're trying to do. So it's definitely, from an incumbent bank, we try and simplify some other processes, but because we are a regulated company, there are some things that we just cannot stop. So, for example, the contract, we look into contract and sign to reduce the number of pages that we do for POC, for proof of concept, but we still need to have a few pages or a few normal legal clauses that need to be there just because we are a regulated company. So it's a really good question, is how do we balance regulation versus innovation, and how do we bring them on that journey?
Well, and part of it is also how do we get comfortable in some of the gray space, or helping to define or redefine the regulatory environment, right? So we work very closely with our legal and compliance partners, and sometimes, some of our regulators will come to us and ask questions about how should we think about this, right? And so, like, one of the things I recently, Zoom's a good example of this, right? So something I'm very frustrated with is we're using Zoom the way we were using a physical meeting. So things that we were doing in a physical meeting, we should be able to do in Zoom. And we're not enabling all that because we're concerned about the difference between electronic documents. It's the same when I think about social media or other things, right? And to me, I think we have to think about them more as a construct of how you manage your customer relationships, how you're engaging with customers, and thinking about consistency on and offline. So if I use a whiteboard in a room, why can't I use a whiteboard in Zoom? I'm just making that one as an example, right? And how do we foster and help educate, right, internally, but also with our partners.
Susanne, do you want to add anything to this question of regulation?
Yes, I agree that it's completely, that our working life is completely changed in the way we engage, and people, when they come to the office versus working at home, I think all has completely redefined, the future of work is such a big topic now. And so I agree, with what Rita said, what Koley said, it's just, I think we all need to learn to work in a different way going forward and to be just more flexible as well.
And I think we have a good question that might fit in nicely here from the audience, asking what comes first, the idea, the team, or the capital? And perhaps, Susanne, that's one for you, since this is in the startup space.
Yeah, I would say, normally as a startup, when companies are launched, the idea is normally the first thing which comes. But then, of course, the team is next. So immediately afterwards, who is founding the company? It's the co-founders. But normally it's a problem. You start out with a problem which you identified in the market, and where you don't have a solution for, you can't find a solution for it, and you think you're able to solve this issue. And then you have to, of course, to test that the issue is big enough. It's not just a focus on one country, one client segment, but it's scalable enough to be worthwhile to launch a business with. So, but I think it has to start out because the worst thing is if you meet founders of fintech teams who have got a problem which they're targeting, which is not really a problem, then it's very hard to find product market fit, to find enough revenues to scale up. So normally what we recommend really is to starting out with identifying a true issue, which has not yet been addressed in the market, and to develop solutions for that, and then trying to grow either organically or with partnerships.
I like that. I agree with that, right? I was going to say what comes first is the customer, right? Yeah. So the customer has to have an issue, a challenge, right? The customer could be anyone, by the way. The customer could be an internal customer, could be an external customer, but like somewhere you're addressing a problem. And so I always talk about starting with the customer. And when I think about investment solutions, I'm always talking about it's not field of dreams, right? It's not because we like this idea and if we build it, they will come, right? Like we need to test that. We need to pressure test along the way, and we need to get feedback, right? So I agree with you completely that, there's a problem or, a job to be done that's not being done. So we do a lot of like customers' jobs to be done research type of thing.
Rita, I'm sure you have much experience working with startups as well. Do you see it the same way? The problem first?
Yeah, for sure. And it's interesting because sometimes we see the other way around and it doesn't work. So I have seen fintechs where I'm asking, okay, what problem are you trying to solve? I still don't understand. So I understand it's a really cool tool. Yes, I would love to have it, but I don't have a problem that you're trying to solve. Is there anyone else that has that problem? And that's when some companies will fail, because if there isn't a problem, it's just a really cool toy, but you don't have users to use it. So definitely the idea, it's what comes first, or like Koley was saying, a problem or an area that we want to research and to find more about.
So when we look at this transformation where the incumbent banks are actually moving into a space where they are growing in sort of a new economic ecosystem and environment, working with many different parties, what's the time horizon for actually doing this very well? I took the liberty of saying, well, there's a steep learning curve now for a lot of companies. How long does it take to master this and to really do it well, so as to stay in the game for the next 5 years? I think that's what Lawrence gave us. Is that a tough question? Anyone wants to answer? Rita?
So I think, so in terms of, if we separate the question, I guess, so in terms of partnerships, the reality is partnerships still take a while. So it still take a minimum of a few months for something to get up and running. In terms of how long does it take to be at the game, I think it's an ongoing innovation that needs to happen. So it's not something that you start now and in 6 months you're done. It's almost like you start now, and then as you go, you need to start to add ideas, and you need to have multiple ideas going because they take a while, and also some of them will lead to you will decide to drop because they are not worth it.
And I also, to add, what Rita said, I think partnerships don't always work out. So we have seen examples of B2B companies who've got the choice of either building up their own sales teams or finding one distribution partner to really reach out and sell through this partner, globally across a region. And sometimes you're, as a fintech company, you're incredibly happy because you find this distribution partner, a large global company through whom you want to reach out, to the end customers. But for this distribution partner, you're one of many products they are selling. For the salespeople in this partner, your product is one of many these salespeople are selling. And so it depends, are the salespeople actually incentivized to sell your product over the other products they're selling? Are they educated? Do they actually know the benefits of the solution you offer? Because if they're not, then you might rely on this sales channel, but it doesn't deliver. And this again costs you time because you might wait and the revenues don't come in, and then you decide, well, I still have to build up my own sales team because this third-party channel just didn't work out. So it's one has to manage and monitor, I guess, the success. Whatever strategy you choose, you have to make sure it really does deliver what it promises.
Great answers. I was thinking, since we are talking about the development into the future, and we'll come back to visions a little later, I was thinking we've just been through COP26 and we've seen companies starting to take responsibility. And I think, Susanne, you also mentioned that in FinTech Circle, you've been working with sustainable developments. How are incumbents faring in how they working with taking responsibility into to the innovation process in their companies in general, or in your own companies? I'm sure you have good answers, Susanne, to start with, and then we can take comments from there.
Yeah, I mean, I can start out with, being a board member at a bank. We talk about ESG at board level. We talk about climate change. We talk about, our responsibility, under the UK regulation to be aware of our responsibilities. So that's really starts at the board level, and the board is being engaged in those topics. I think the difficult things are when you want to measure, let's say you want to measure your carbon footprint, as a business, that's really hard. There are not many tools out there which can tell you as a bank that's your carbon footprint across, your operations. Equally, it's hard as an individual to measure your own carbon footprint as a person. And so the film which I mentioned, which we launched this week at FinTech Connect, it's called Responsible FinTech. And it's our second film in partnership with ITN, where we try to delve deeper, into this area of responsibility and what FinTech can do. And of course, there are fintech companies out there now who use open banking in order to analyze our transactions. And if that's done well, about 60-70% of your carbon footprint can be calculated based on how you spend your money. And that's something very easy, because then you know how much, what's your carbon footprint, and then when you measure it, are you carbon obese? And if you're carbon obese, you can think about, how can I reduce my carbon footprint? What can I do better? If you can't reduce it, maybe you can offset it somehow. So at least you've got some tools available, to improve the status quo. And I think we will see more where fintech really takes up more responsibility and tries to help both consumers and businesses who want to do the right thing, to provide them with dashboards, with tools, to be more moving towards net zero targets.
The measurements is a key point here. Yeah, yes, that's a good idea. Anyone want to add to that? Rita?
I think the only thing I would add is the idea of alternate data, right? And maybe building on some of Rita's initial comments around AI, right? But how can we use new technologies to help us use alternate non-standard data sources to help us identify ESG, SRI issues, opportunities, right? Really unpack more about companies and companies' behavior, and give us an edge, potentially on the next companies, right? The next real opportunity sets on the investing side. So I think that the technology can also play a really good role in helping on the investment side and helping identify organizations. And so I wouldn't understate that too, right? In different ways we can partner.
Yeah, so if I can add, so it's interesting because it's a hard topic, like Susanne was mentioning. It's even harder if you are a global company, because data in UK and US, it's not perfect. Now, if you think about data in China and other developing countries, it's even worse. So I think ESG is a big topic in the industry, and like Susanne was saying, it comes from the board. It also comes from the regulators, which I think it does really help pushing the conversation. There is probably two steps in which we're looking at this. So the first one is just documenting what we have currently, what is the data that we already have in the different countries. And the second one is very similar to what Koley was saying, is what other data is out there. So social media data or other data that is available in those countries that can be used to create some of those scorings for some of those suppliers, for example, in China. I think it's also very interesting because if you think about ESG, it's not just around climate, but it's also around social. And one of the things that we are discussing just before, and it's interesting because we all women in this panel, is around actually understanding what is the woman on board of some companies, for example. So even myself, I speak with a lot of different fintechs, and one of the key metrics I was trying to put across internally, it's around not just internal diversity, but also diversity on the partners that we meet. And it's actually really hard to get that data externally. So I think it's not just something that is focused, but there is something that we can actually, after we have collected data, we can make some changes and start helping also the diversity part of it. Great.
So we have a question on this, and somebody wants to know if you think we have enough diversity in financial institutions, or that more can be done. I'd be bold enough to say that more can be done, surely. So the question is, what can be done?
I'm happy to take a first pass at this because I do lead, for my part of the business at least, I'm the executive sponsor of our diversity, inclusion, culture, and equity efforts. And I think I certainly agree that more can be done, and we think about it in multiple buckets and how we think about that. We start to think really early in terms of how can you develop talent or future talent, right? How can you make them aware and understand our business so that becomes an option as they mature, right? So how are we developing talent before it's even an opportunity for us, right? So I'm talking about high school, people that aren't, and then how do we bring people into the organization earlier from diverse backgrounds, right? So there's the diversity side, which is recruiting, onboarding, right? How do we create a diverse and inclusive environment early? Then it's how do we retain and grow that talent? How do we increase cultural awareness, both of other cultures, right, as well as within the firm, right? And so within our own culture, what is our culture? What does it stand for? And diversity and inclusion are important pillars, but other things that are coming up around work-life balance, which we've all been, I think, exposed to with the working from home, right? And this, in some ways, complete blending of work and life. And then we also think about how do we serve the communities, right? And I think because diversity to me is being invited to the party, and inclusion, the analogy is often is being asked to dance, right? And so they have to work hand in hand. So I think we can work at increasing diversity for sure, but we also have to create the culture and atmosphere where that will be successful. And so we have a Champions Council, we have people involved around the world who are really passionate about this, who are standing up initiatives that are responsive to the organization's needs. I think there's still far to go on that journey, but I'm excited about the progress we're starting to make.
That was a good all-around answers. Any short comments on that from either you two others?
No, just I love the analogy to be invited to the party, be invited to dance like that. It's great. Yeah. Yes.
Yeah, I'm going to borrow that as well.
Yes, exactly.
It's a nice analogy, really. So I think we're coming to the end of our panel, which is really sad because I would like to ask you many more questions, but But sadly, we have a time frame, and I think also perhaps our audience is getting tired after a long day or 2 long days. So I'll just ask you, when we look at the incumbents and their position in innovation and driving the development forward in the next sort of 5 years time span, what is your vision for them? Where do you see them go? Rita, would you like to start?
Yeah, sure. So I think in 5 years' time, we will probably still have a few different models. The same incumbent will have a few different models. So we have the one which will be very similar to what we see nowadays, and that will be for all the generations or even generations that are living in the countryside. So I think that will still be there in 5 years' time for sure. And then the other model will be much more that we are talking about around embedding financial services into everything that we do. I don't think it will be 100% done, but it will be in many more other places that we don't have currently. And I guess in terms of doing that, there will be just a few different technologies that incumbents are going to be leveraging, and they're also going to be leveraging the ecosystem that we discuss. So the fintechs, the startups, and I might even say I think the big techs will also play a part into that ecosystem.
Koley, would you like to go next?
Sure. I actually completely agree with what Rita said, right? I think there's a combination of what the future will look like. I think that, and the next 5 years, I think, are still early days in the future, right? If you think about the history and heritage of many incumbents, right? 100 years, 100+ years, right? Even 20 years, right? So 5 years is just a drop in the bucket. I think we will see much more of this collaboration, partnerships. Hopefully we see how people can leverage each other's strengths. And I think we see that mindset start to evolve in terms of what is the business, how are we solving it, what is the customer, and how are we really addressing a customer need, right? And I'm hoping we hear much more dialogue around how we're addressing something in the customer needs as opposed to something a business wants to achieve, right?
Great. Susanne?
Yeah, I mean, I would say, I think probably not everybody will make it. I think there are some institutions which will not survive realistically. I think there will be more M&A activities, more combinations, more mergers, joint ventures. We will see more acquisitions of large fintech companies buying out smaller fintech companies as well. So we will see that. Challenger banks buying out lending businesses, for example. We see more consolidation, I guess, across the whole industry. And because that's what we've seen in other industries. When we think about the book industry, the movie industry, we've seen there is disruption going to happen, which has an impact on the number of players. And so this is still coming, I think, more in our industry. But I think it's all very exciting. I think we are in a very exciting times and in a very exciting sector. And a very important sector, because of course finance is not just for our own benefit, but it empowers the whole world. We are now rebuilding the economies post-COVID, and so I think we've got an important role to play to help society as a sector and to help our our ESG achieve our ESG goals. So I think all of us working in this sector, I think we all can enjoy that we can contribute and that we can play our role.
It makes totally sense to mention both the big techs, which is sort of the dark horse in this area, and the consolidation in finance, because definitely that's going to continue as well, but also with disruption in this whole market. And I like the way that you all pointed to the good advice of leadership and focus and value for customers as the guidelines to follow when we try to stay in the game here over time. So I think this leaves me just with thanking you very much for sharing your ideas and your visions and your thoughts. It's been a real pleasure to have you, and thank you for the audience for actually staying on till now.
It's great, Anette. Thanks very much for chairing our panel.
Thank you.
Yes, thank you.
Thank you, Anette, for an excellent roundup, and thank you, panelists, for a fantastic final panel of the conference. Thank you all.
Thanks very much. Bye-bye.